Good morning, traders. This is Perry Wilkie with StartupTrading.com. It is uh, 8 minutes till 9 a.m. Eastern Time on Thursday, August 7th. So, looking back at yesterday's session, right, we got off the block and we just kind of ping pong between 6,300 and 6,325 on the SPX, right? Then we ran up to 6,350 and kind of consolidated near that zone, uh, the rest of the day, and that all was before 11 o'clock, right? So then, as we look at, we'll get into the overnight, but basically we're up. The overnight high was right around 6,400, and we'll get into more of that on the positioning here in a second. Then, as we look at yesterday to the positioning. Walls for the day, or just the day range, was supposed to be between 560 and 568. That's basically what traded yesterday. The 560 was hit in the overnight session, and then we got down to under 561 and almost up to 568 yesterday. So it's a very technical positioning. You're at the bottom of the range, you can't go any lower, so you just kind of rotate it up to the top. I thought it'd be a little bit more choppy than it was, but if you were watching the VIX, and I think I'm going to update this grid. I don't really reference any of the numbers for the NDX. I think I'm going to replace this with the VIX so you can see. But if you were looking at the VIX, which I think would be a great add on this simple read 8 grid. But if you were looking at the VIX yesterday, it was just a dive down, right? That if you were long and looking for upper targets, that was the confidence you needed to hold your positions, because as long as the VIX is diving, there is no reason to be throwing in the towel on your runners. And then as we look at what that did to structure yesterday, we had some single prints that went off in the NASDAQ and the ES. So those will be critical markers for the next couple of sessions here. And then looking at, untested points of control, yesterday's point of control was 63.71. We're currently trading 40 points above there at 64.11. And then going back to last uh, Friday's point of control, you're looking at 62, 64 half, right? Nowhere uh, close. And I did add on here until it doesn't appear to need to be on here anymore. I added on a loosely based uptrend on the top end of the range. You can see that over time, the line that I drew, we have got above it. But if you look at all these touches that it's had around here, that's when you're starting to get long in the tooth. Just because you're long in the tooth, just like between May 12th and May 20th, doesn't mean you can't stay long in the tooth for a while, but it means you're probably a little bit over. And then because this is rising at a pretty good clip, you can see, uh, how far it went up before you reverted. And, you hit it here, but, you never even come back to see those levels, even on that pullback that we had last Thursday and Friday. So this is just something, it doesn't mean you need to short it when it gets here, but it means I'll probably be a little bit less aggressive with your longs. So looking at the end of this week, that would be up at 65.50. There's a lot of stuff going on at 6,500 in the cash, so that would be pretty close to where those resistance levels are positioning wise. We'll get into in a second. And we talked about uh, on Monday and Tuesday, Wednesday, right? All we did on this breakdown was go back to the bottom of the balance zone that we were in, basically between um, the beginning of July to the middle of July. And then we had, a breakout above there. And then we finally had that engulfing bearish candle down, which is supposed to be, a wicked downward pattern, right? You can see we got one more day of follow through on that Friday. And all we did was touch the bottom of that balance, come back up on Monday, and then on Tuesday held the top of that previous balance zone, right? So this is pretty much saying that the breakout is valid, and then right back to it. And then if you look at the overnight session, we're getting close to the areas that we sold off from again. But both of these indexes, the ES and the Nasdaq, both looked exactly the same on that, uh, profile, if you will, technical analysis. And we'll just see what we got, above. But the easy money is probably gone, right? The easy money was buying the bottom of bounds and then the retest of the upper end of bounds. Uh, so we'll see where we go from now is what I'm trying to say. And then we'll look at the overnight session. So again, you have to remember, right? We traded these value areas below us yesterday, so there's no reason to think that we can't get down to yesterday's low. You shouldn't be gunning for it, right? But you know those are on the table. Value area low, yesterday's low. When we have this type of a pop, right? So you're either going to hang and hold, right, or you're going to get a little bit of a retracement and then hold, and then we'll see. A gap fill, in my opinion, would be bad. You need a gap and go to be long. If we fall down that low, I'm sure we'll get some back and forth, but I don't think we're taking out the high again. I could be wrong. I've been wrong before. I'll be wrong again. But if we get a gap fill, I don't think you're coming back up and taking out the high later. Uh, so looking at positioning now, and then really what I'd like to get into is 570 is the call wall for the week. We're currently trading 571 half. Right, we've hit a little bit over 572 in the overnight session on the Qs. Uh, so you can see 572 half was basically where we topped out at, and we're coming up here. So uh, we got room up to 580 long term, but we have to see if we can hold over 570. So 570 is going to be basically right at let's call it 535, 25,535. I'll update that when I put out the 8 grids this morning. Uh, but that's my guess about around 535. So going back below there, you'll probably get 100-point drop, and that would probably flush out a lot of the overnight traders, and that would be down to around 430, 431 is where that would be. That would be about a 180-point drop. We're currently up 215 after being up 255 points on the Nasdaq. So that would be that just a flush and then get out. And if you look at right around where that would be above the gap fill. That would be basically just testing and you know retesting yesterday's high is all that would be, and we'll see if that's on the table. So that's one scenario. The other scenario is that uh, if we were to open now, the overnight high, as you can see, on the ES is right around this. I'll bring it down. It's 64.2675, right? That is basically 6,400 in the cash market. If the cash market were to be open in the overnight session, that's where we would have topped out. There is a chop zone that goes basically between 6,400 and 6,430, 30-point chop zone that you could get tied up into and consolidate, and then uh, you really just need that to hold, and then you can see the halfway back between yesterday's settlement and the 6,400 would be that 63.75 level. That's really if you're gonna really play keep away from the Bears, that's all you're gonna get for a pullback. If you start, coming back down, I would on a first test, I would blind limit right around the 63.50, just because there's so many people trapped below there, probably with about an 8-point stop, and that's all I would give it. Uh, and then you could probably buy 51 with a 9-point stop, but you could get stopped out if that trades. But I would think that if that trades, you're probably going to at least get back up to 71, and I like the risk to reward on that. And then it's to 75, and then so you're risking about 8 9 points for 20 25 points on that one. And then so as you're looking at uh, really what you've got here, you got 640 is so we got the weekly call wall is right here at 6,400 in the cash. The long-term call wall is 6,500 at this point in time. So, there is room to the upside. And then the next resistance above this 6,400, if we can, muster it, would be this 640 on the SPYs. So the 640 on the SPYs is going to come out to where right around where this yellow line is. So it's probably right around 64.43 is where that would be. That would be your next resistance if you can hold above 6,400 sometime today. And then, it's not on the table today, but the long-term wall above for the Qs right now is at 580, right? We're currently trading 571. So that would be, you're looking at 23,000. Let's just call it 940 by the time we get up there, 945. 23,945 is just under 24,000. Uh, is about 40, 60 points under there is what you're looking at is the long-term wall right now. So as we come back up, so one interesting thing for support, so you got to see if we can cross 6,400. You got to see if you can hold above, and I would even give it uh, the wall for today, right, is supposed to be 568. So you got 568, 570 right here. So see if that ends up being what should have been resistance turns into support. And then you can kind of migrate back up towards this 572, 575, 577 half, right around in there. Uh, and that would really just stick it to the Bears. So I'm going to be interested to see what we do in the first 25 minutes. Are we just going to get a dive back towards this gap fill, or are we going to just get a very minor retracement, maybe back to where these fair value gaps are, right around uh, where Jack's profit target was yesterday, right? That he was looking at that 23,504 area. If that holds, right, you could get up to, and I'll have to look at his draw when he goes over his charts to see where that 61.8 and the neg 100 are on that sequence. Uh, but if you hold the neg 23, you could just bounce between there and those other upper fibs on that same sequence. Have a great day. We'll see what Jack's looking at next, and I'll talk to you tomorrow.